This section we will learn another setup, the Swifter. The daylight was about trading in anticipation of fast explosive moves. This setup may or may not give explosive moves, but is swift enough to reach targets, hence the name. In most setups, you will find that the process of price reaching target levels is quite painful. It does take a lot of time, and also you encounter whipsaws. But this strategy is safer. The occurrence of this setup is more than the previous setup we learned. Okay, so the primary tools that will be used for finding setups are stochastic indicator and ADX. For higher probability setups, you must stay with the trend and also bring into play the concept of support and resistance. Now this long swifter is a buy setup where the setup candle needs to have white colored body, and a short swifter is a sell setup where the setup candle needs to have black colored body. Now let us now gain more knowledge on the tools, and then how do we determine a potential setup, where to enter, place stops, and determine potential targets on the charts itself. Okay, so let's start understanding this setup swifter on a stock chart. In order to trade this setup, we require stochastic indicator and ADX both with 8 periods settings to be plotted on the chart. For a long swifter, stochastic indicator must have been oversold and ADX must be hovering above 40. This blue dotted line on ADX is the level 40. So when stochastic has gone below 20, we need to have ADX trading above this blue line. So we have such situations here, 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 and here. We have basic ingredients now. Let us now look into entry, stop, and target for a swifter and then understand filtering technique. Entry is going to be above setup candle. Stop is going to be below that very candle, and target will be preceding swing high. Let's study this first setup on chart. Now once we have prelim conditions being met, we then need to have a white candle, and that's here. Accordingly, entry is going to be above the candle's high, stop below its low, and target will be immediately preceding high, this one over here. Now we must check for the filters and have to watch out for two things: support or resistance levels and risk-reward ratio. A valid support can occur at two places. Now standing here, one is at a preceding swing low, which is this one, and if standing here, support is taken at a swing high prior to the latest swing high, which is this one. This being the latest swing high, this is the preceding swing high. So this support has come at a preceding swing low. Second thing we must observe is risk-reward ratio. It's a ratio used to compare the expected returns to the amount of risk undertaken. So we must have a minimum risk-reward ratio of 1:1.5 with respect to preceding high. This swing high happens to be our profit objective. So if a setup requires a trader to take a risk of $10, then expected return should be $15. And we have this parameter also getting fulfilled easily. Risk-reward ratio for this setup is certainly much better than 1:1.5. It's almost 1:4, an excellent setup. Now this setup over here has taken support at a swing high prior to the latest swing high. Now this setup here also has taken a valid support, which is at a swing high prior to the latest swing high, which is this one. This candle is having a white body and will be defined as a setup candle. trigger of this candle's high will activate any buy order. Low is going to be the stop and target is this swing high, the latest one. And yes, risk reward ratio is also a minimum of 1:1.5. So this is a good setup. Now coming to this setup now, the basic structure is in place with stochastic oversold and ADX hovering above 40. And a buy trade, if taken, would have been profitable too. But we will not be buying such setup as we do not have any reference point of support. What I'm trying to establish here is that no matter what, we will not be converting any buy signals into actual trades unless all the parameters are getting fulfilled. We must be disciplined. Do not rush into trade. We are no doubt going to miss out on such trades, but that's really okay as setup of this kind has lower probability of success and we are striving for higher probability of success. So we have a currency pair here, GBP USD. Let's dig more into this setup. So we need to have a stochastic indicator and ADX both with 8 periods setting to be plotted on the chart. For a long swifter, which is a buy setup that we are learning at the moment, stochastic indicator must have been oversold and ADX must be hovering above 40. Now this black dotted line on ADX is level 40. So when stochastic goes below, we need to have ADX trading above this black line. And we have lot of such situations on the chart. Let us now look into entry, stop and target for swifter and also understand the filtering technique. Let's recall that entry is going to be above setup candle, stop is going to be below that very candle and target will be preceding swing high. Let's study this first setup on chart. Once we have prelim conditions being met, we then need to have first occurrence of a white candle and that's over here. Accordingly, entry is going to be above the candle's high, stop below its low and target will be immediately preceding high, this one over here. Now we must check for all the filters and have to watch out for two things, a valid support point and a minimum risk reward ratio of 1:1.5. So over here we do have a qualified risk to reward ratio, that's good, but there is no reference point of support. So we will not act on this setup and wait for another one. Now the second case, the candles have validly taken support, but risk reward ratio is not favorable, so we avoid taking a trade here also. Same is the case here, there is no reference support point. Now in this case here we have both a reference support point and risk reward ratio requirement is also met. So finally we have a setup to trade. This is first occurrence of a white candle, the setup candle. Entry is going to be placed above its high, stop is going to be placed below the low of this candle and this swing high over here will be profit objective. Next we have these two setups over here and here, but clearly we do not see any reference support points and avoid taking trades. Then we have a situation here. Price takes support at preceding swing low point. Also risk and reward ratio is excellent. It's around 1:4. A very good opportunity we have here. We have a long swifter here again. Let's do this exercise one more time and we have this chart of GBP JPY. So we need to have stochastic indicator getting oversold and ADX hovering above 40 and we have all such instances here. This first setup over here did not have any reference support point and will be avoided. This second scenario, price does take a valid support. Also, risk reward ratio is higher than 1:1.5. It's almost 1:4 and very attractive. This is first occurrence of a white candle. Entry will be above this candle's high, stop will be placed below its low, and this high over here will be our profit objective. This case here also, we have this setup taking support at a swing high prior to the latest swing high. Risk reward ratio is excellent here. It's almost again 1:4. Now this is a first occurrence of a white candle. So entry will be above this candle's high, stop will be placed below its low, and this swing high will be profit objective. Now we have another setup here. Both support and risk reward criterion are not being met. We have a risk reward ratio of 1:1, and we will not trade this setup and wait for a better one. Now this setup over here may be excellent in terms of risk reward ratio, but there is no reference support point and hence we avoid. Now this setup here, you may choose to trade or not. The reason is that this is not a classical support point that was being described earlier and is very likely to leave you confused at this stage. But once you have a command over this setup, then you can look for broader swing-based support points like this one over here. Now let's study this setup first, but do not be in a hurry to trade the same initially. Now these are broader swing points, and accordingly we have preceding swing low over here. Now we look into risk reward ratio, and the same does look promising. The ratio is almost 1:4 here again. So this is a setup candle, the candle with the white body. Accordingly, entry is going to be above candle's high, stop below its low, and target will be this immediately preceding swing high, this one over here. If in case you haven't realized, then see how this filtering technique helps. Now this chart is throwing 1, 2, 3, 4, 5, 6 setups. If all trades were taken, then 4 would have been profitable, including this setup which is giving us very marginal profits, and 2 lost trades. Now with filtering technique in place, no doubt we have lesser number of setups, 3 setups in this case, but all of them are profitable. Now do not believe that this is the holy grail, as there continues to be none. Okay, time now to understand short swifter. There is some change with the basic ingredients, but every other parameter remains the same. Filtering technique is the same, and so is the case with entry, stop, and target. For a short swifter, that is a sell setup, stochastic indicator must have been overbought and ADX hovering below 25. So we have all such situations on this chart. Entry is going to be below setup candle, stop is going to be above that very candle, and target will be preceding swing low. Now let's study this first setup on this chart. Okay, so we have stochastic overbought and ADX below 25, and that's good, but we will still not be taking this trade, as that would mean going against the trend. Can you see the trend is up? So we actually want to buy this trend, not sell. So remember, we are looking to trade with the trend and not against it. But yes, of course, if along with you look for an RSI based divergence in place, then certainly a trade can be considered. But you should avoid trading if purely based on the parameters of a short swifter. Now we have this setup over here. Price is now trending down and have a short swifter in place. The same occurs at a resistance point and risk reward ratio is almost 1:1.5. So this setup is tradable. Now this setup here again doesn't have a reference resistance point, and accordingly we will avoid taking trade here despite it turned out to be profitable. But that is completely okay. Now this example over here will emphasize how important it is to wait for trigger points. Now at this juncture, things look absolutely fine and all fit to take a sell trade. We have a black candle in place and striking resistance, which is this preceding swing high. Risk reward ratio is also excellent, offering around 1:4. But low of this setup candle, this one, never got triggered. So no sell trade would have got activated. Now this lesson is for them who fail to realize the importance of triggering events. And this stock just continued to rally. Okay, so we have this currency pair here, GBP USD. Setup formation requires a stochastic indicator to have an overbought reading and ADX to hover below 25. So we have such situations on this chart here, here and here. Once we have prelim conditions being met, we then need to have first occurrence of a black candle for defining entry, stop and target. So entry is going to be below setup candle, stop is going to be above that very candle, and target will be preceding swing low. And now filtering, we must have a valid resistance point and a minimum risk reward ratio 1:1.5. Now this resistance can occur either at immediately preceding swing high or else a swing low prior to latest swing low being made. So let's check this setup first if all other criteria is being met or not. Okay, so resistance is faced at a preceding swing high and risk reward ratio is also around 1:2. So we have a trade here. This black candle is the setup candle. Entry will be below its low, stop above its high, and this low over here is going to be the target. Now we have a scenario here again. Standing here, either this swing high or this swing low over here is the point of reference in order to construe a valid resistance. But price doesn't meet any of these 2 points, and we are going to avoid taking trade over here. Now we have another setup here. Now standing here, we have now either this swing high or this swing low as a point of reference, and price does strike this preceding intermittent swing high. This is first occurrence of a black candle and will be defined as a setup candle. Risk reward ratio comes to 1:1.5, and that's okay. So we have all the valid reasons to initiate a trade here. Let's look into another chart on Short Swifter, and this is USD JPY. We have all valid scenarios on chart here with stochastic overbought and ADX hovering below 25. So let's examine this first setup. Okay, so price does resist at a valid region, and that's this preceding swing high. This first occurrence of a black candle is going to be the setup candle, and this preceding low as the target. So let's now look into risk reward ratio, and the same looks terrific. It should be around 1:6 or 1:7, and that's excellent. So entry is going to be below setup candle's low, stop above its high, and this is going to be the target. Now this case here, price is resisting at a valid point, this preceding swing high. This black candle over here is the setup candle. So this swing low will be the target. The risk reward ratio is also fine. It's certainly better than 1:1.5, and so the setup is therefore valid. Now let's look into this final case. Price is definitely hitting and resisting at preceding swing high, so that's good. Here is the first occurrence of a black candle and will be the setup candle. This swing low will be the target, and consequently this risk reward ratio looks very attractive. It does look more than 1:4. So this opportunity that we have here is again excellent. So this setup Swifter is a profitable setup. Obviously, if you trade the way it should be, and don't ignore the filtering mechanism at any cost. Now, during several charts that we examined, it was quite evident how the mechanism did help in eliminating some poor trades. So you got to be disciplined, or else you are very likely to pay the price and see your bank account to shrink.